Hey, this is Danielle, and welcome to today's trade review where I'm going to be talking about ACHR. I also live streamed my trading room session to my X account, which I'm going to be doing once a week. So make sure you check that out. You can also find it on the Simpler Trading YouTube. But essentially, what happened here was this one came up on my radar because it had increasing volume. You see right here, this volume overlay is just continually increasing. And then on Friday, it was up big. I think it was up maybe 12 or 13%, which seems a little crazy to get into something when it's up 12 or 13%. But the thing is that this ticker has high short float. When you're thinking about getting in something that's already up big, most important criteria here is looking at the short float. And this one has about 18%. So what that means is that the higher it goes, the more that it can explode. When that volume's coming in and the ticker is continually going higher, it just means the short sellers are losing money. And they're going to be forced to buy to cover. But basically what I did was I just came in and I bought them right before the close on Friday. I mean, it was literally probably like 10 minutes before. One of the main criteria here is always going to be the squeeze. We did have a squeeze on Friday on that 15-minute chart in the morning at least. So didn't quite have one right at the close. But oftentimes if you can catch like a lower time frame squeeze, like a 15 or a 30-minute squeeze right before the market closes, that's where you're going to get a gap up the next day. It just had high volume and momentum going out on the highs of the day on that high volume. On these candles with the blue dots, that's how you can see that it has high volume. If we just go ahead and take a look at the daily chart, what you'll see here is that we're basically rallying right up against resistance. So this is the spot that's either going to fail or it's just going to explode in an OKLO kind of move. So in this type of scenario, generally what I do is I take some profits at that high because tomorrow it could be down 10%. What you'll see right here is that I have options that are expiring in 11 days. So it's one of those things where it's like, ugh, I wish I had a little bit more time, but this was just supposed to be an overnight trade. If you look at these options up 150%, and basically what I'm going to do is I'm just going to scale out here because, I mean, you don't want a 150% loser or you don't want a 150% winner to go to a loser. So this was a trading room trade. I used $500 of risk. So I'm going to close 3 of these. And then that way I'll at least pay for my cost basis. So I'm going to close 3 of these. And then after that, I'm going to go ahead and post that alert to the trading room, let the members know that I went ahead and started scaling out. And then I'll just continue to manage the rest of the trade and you'll see the alerts when I post them. See you later.